CME Group offers two related futures contracts that provide direct exposure to the beef market. The live cattle futures contract, ticker symbol LE, controls and delivers cattle from when they are young calves grazing on hay up until they weigh about 600 to 800 pounds. Upon reaching that weight, ranchers move the cattle to feedlots for an accelerated growth period of 5 to 6 months, during which they reach the typical slaughter weight of 1,250 pounds. During this latter stage, the larger cattle are represented by CME's feeder cattle contract. The entire process, from calf to steak, typically takes 2 years. U.S. beef production is centered in Arizona, California, Colorado, Iowa, Kansas, Nebraska, and Texas, and generates approximately 25% of the world's beef demand. However, due to massive domestic demand and the global dispersion of production, the U.S. remains a net beef importer, with both Brazil and the EU also acting as leading exporters. Each CME Group futures contract represents 40,000 pounds with a minimum price fluctuation of 0.00025 per pound, or $10 per tick. The contract trades Monday through Friday from 8:30 a.m. to 1:05 p.m. CST. All market participants trading LE monitor reports from the U.S. Department of Agriculture, or USDA. Cattle traders await the monthly Cattle on Feed report, which contains information about the quantity and quality of the herd size for both feeder and live cattle. Market participants also closely analyze reports detailing cattle auctions, slaughter figures, and supply of frozen meat. To devise a trading strategy, the trader of LE combines these USDA reports with information about the weather, corn, and other agricultural grains. A 100-pound calf can typically grow to 1,250 pounds if it is constantly fed a diet of corn. Consequently, corn's price dramatically impacts the price of LE. Should the cost of corn and other feed rise too high, the rancher slaughters the herd early and at a lower weight, which impacts the value on both nearby and back-month cattle contracts. The size and health of the herd is also sensitive to weather. Unusually hot or cold weather slows the rate at which the cattle gain weight, which in turn reduces their final slaughter weight. As with other agricultural products, the live cattle trade is seasonal, and LE tends to be higher from November to January and lower from February to May. Nonetheless, a trader must stay attuned to the breaking news and changes to market structure in the cattle market. A news report about mad cow disease breakout could impact global demand patterns for years. Similarly, global beef supply is poised for continued innovation as China is yet to tap its cattle production capabilities, and the South America industry is still expanding.